Good evening, and welcome to the AJP Northeast Asia market close. Artificial intelligence optimism met its sharpest reality check in months. A global semiconductor sell-off, rising concern over the cost of the AI infrastructure boom, and growing pressure from China's rapidly advancing chip industry combined to send Asian technology stocks sharply lower. Korea bore the brunt, while Japan and China followed with different degrees of damage. One theme connected all three markets. Investors began questioning how much the AI boom should still be worth. The sell-off followed another decline in U.S. semiconductor stocks after concerns mounted over the enormous financing required for next-generation AI infrastructure. At the same time, reports that China has begun producing domestic chip-making equipment and the blockbuster listing of memory maker CXMT reinforced fears that competition in semiconductors is accelerating faster than expected. Investors also stayed cautious ahead of this week's Federal Reserve decision and earnings from major U.S. technology companies. The result was another sharp divergence across Asia. Korea's KOSPI plunged more than 10% as leveraged AI positions unraveled. Japan lost almost 4% as semiconductor heavyweights tumbled. Shanghai fell just over 1%, cushioned by its broader market composition, despite weakness across China's AI chip sector. South Korea suffered by far the region's biggest decline. The KOSPI closed at 6,023.63, down 732.12 points, or 10.84%, after another wave of aggressive selling centered on AI-related semiconductor stocks. Samsung Electronics plunged 13.58% to 219,501, while SK Hynix dropped 14.37% to 1,555,001 as global investors continued reducing exposure to memory chip leaders. Even companies leveraged to SK Hynix were hit. SK Square fell 15.33% to 928,001, reflecting concerns that weaker semiconductor valuations could weigh across Korea's AI investment ecosystem. Korea remained the market most exposed to the AI trade because Samsung Electronics and SK Hynix dominate both the benchmark index and retail leverage products. As positions were unwound, selling pressure intensified across the broader market. China's benchmark proved more resilient, although semiconductor shares still faced heavy pressure. The Shanghai Composite closed at 3,806.92, down 51.32 points, or 1.33%. Freshly listed memory chip maker CXMT slipped 2.35% to 47.85 yuan after its spectacular market debut, as investors locked in profits while reassessing the competitive outlook. AI chip designer Cambricon Technologies dropped 9.54% to 1,122.64 yuan, making it one of the day's biggest losers in mainland China. Meanwhile, foundry giant Semiconductor Manufacturing International Corp., or SMIC, declined 3.33% to 68.3 Hong Kong dollars, extending weakness across the semiconductor supply chain. Despite the declines, Shanghai outperformed regional peers because the broader index is less concentrated in a handful of globally owned AI names than Korea or Japan. Japan remained caught between Korea's concentrated semiconductor exposure and China's broader market. The Nikkei 225 closed at 62,446.00, down 2,485.19 points, or 3.83%. Semiconductor equipment maker Tokyo Electron plunged 11.24% to 55,740 yen, tracking another decline in global chip equipment stocks. Chip testing leader Advantest dropped 10.66% to 25,355 yen, reflecting concerns that customers may eventually moderate AI infrastructure spending after this year's extraordinary rally. Memory producer Kioxia Holdings suffered the steepest decline among the major names, falling 18.33% to 44,550 yen, as investors weighed rising competition from China's memory industry following CXMT's emergence. Japan's semiconductor sector therefore mirrored the same global repricing, even though the broader Nikkei proved more resilient than Korea's market. Today's session showed that investors are no longer simply buying the AI story, they are beginning to scrutinize its cost, competition, and future returns. Korea demonstrated the risks of concentrated semiconductor exposure. Japan reflected the vulnerability of AI equipment makers. China showed that even domestic chip champions are no longer immune as investors reassess valuations across the industry. The next test now shifts to US technology earnings and whether the world's largest AI companies can justify the unprecedented spending that has driven this rally. We'll be back next session to see whether semiconductor shares stabilize, how investors respond to upcoming US earnings and the Federal Reserve meeting, and whether buyers return to Asia's AI leaders. Thank you for watching AJP.